What's going on, everybody? Cullen Gandy here, coming at you with another video about mortgage finance, regular personal finance, and just basically anything financial to get you down the road to where you want to be. Today, I'm going to field answers for the number one question I get about what it's like working in the mortgage industry, especially as a mortgage loan originator, and that is, how does the pay work and how long does it take to get paid a lot of money? You know what I'm saying? This aspect of the mortgage industry is often the most interesting part of our job, right? It's how we make our living. And LO comp is also a really big issue and a subject they're going to be covering if you take the NMLS safe test, because it is something that has become really regulated since the last time we had a major financial crash related to the mortgage industry. The very first thing I want to get out of the way is how we are not compensated anymore as regular mortgage loan originators or loan officers, and that is we are not compensated via a what's called yield spread premium. So how a yield spread premium used to work is that a LO used to be incentivized to sell a certain product rather than another one, not because the borrower was better suited to that product, but because the sale of that product would garner a bigger commission for the loan officer in question. This is because that the product either was more desirable for the lender's investors, and so the lender was willing to offer whatever the differential between that base interest rate that they could qualify for, that is, the borrower could qualify for a certain instrument at a certain rate, and whatever the difference that was between what they actually sold it to them for above that. All of that in between would be room for profit for the potential loan officer. That's a big no-no. That's because as loan officers now, as we are regulated by the CFPB, or the Consumer Financial Protection Bureau, we have to make sure that all of the loan considerations that we are making are for the best tangible benefit or the best interest of the borrower and the person qualifying in question. So no more of the yield spread premiums, not for regular LOs. For mortgage brokers, it's a little bit of a different story, but that's for a different video. Getting down to brass tacks on LO compensation, or loan officer comp as they call it, the main way that you're going to see lenders offering loan officers being compensated is by the volume of the loan balances that they bring in per month, or it can also be a certain base salary, and then above that you're going to see various amounts of commissions based on what's called basis points. One scenario that I've been quoted quite often if you're interviewing actively with different lenders is going to be the standard base salary on a draw, right? So there's going to be a certain amount of anticipated sales during the course of a year that you're going to be responsible for, and that's called a draw, so you're going to get that in anticipation of that. And then everything above that is going to be profit for you, that is going to be in the form of commissions. And that can be set, with your individual lender or your individual broker, whoever you are working for as a loan officer. One fairly standard form of compensation that I've come across is the, let's say, anywhere from $35,000 to $40,000 base salary on a draw, and then there's going to be tiered structures of commissions based on the amount of loan balances that you bring in as a loan officer. For example, if you have $1 million worth of sales in a month, that's going to get you 25 basis points, or 25% of a percent of the total sale of the mortgage. That is to say, 0.0025 times the amount of the mortgage that your loan is going to be originated for. Above that, let's say you knock it out of the park and you do $2 million of sales. Well, that can graduate as well, and you can set that ahead of time with your lender or broker, however it's situated, where you can get 50 basis points at $2 million per month if you reach that goal. Or $3 million, let's say they'll give you 75 basis points, or 75% of 1%. If you bring in $3 million in a month and you knock it out of the park, and your agreement with your lender or broker is that you get 75 basis points, or 75% of 1%, as I like to say, then you can expect to bring in anywhere from about $20,000 to $23,000 for that month, which is a nice chunk of change. On the other half of that, if you aren't able to bring in those big loan amounts, or if you just can't convert the clients, let's say you have inbound leads, you just can't convert them, then obviously you won't get compensated at that level. If you get $2 million, you're going to get whatever that is times 0.005. If you get $1 million only, then you're going to get whatever that is 0.0025, and etc. So let's say you don't even get $1 million and you get $800,000 in the course of your work there under this, X label lender, then you are going to get whatever your base salary is, and there's just going to be a draw on that. But that's not the only way that you can be compensated. As a loan originator or a loan officer, basically you have a lot of leverage to sort of negotiate with your particular lender or broker ahead of time how you want to be compensated. So let's say, hey, look, I'll do all of this for you. If you have inbound leads, I'll convert the leads. If you need a good network or somebody who's already got a big book of business, that's cool too. I'll just come in. I really just want 65 basis points on every dollar that I originate. Hey, if you're that good or if you're that in demand, let's say you have like 25 licenses, maybe you can get that and that can be your base pay for the entire tenure of career. Or what's more likely, if you're a new loan originator and you want to just get your foot in the door, step your toe into the pool as it were, but you want to see if you can make some money, there are these big, large national lenders that kind of can change it up from time to time as well. Let's say you like a more stable type of lifestyle, but not necessarily one that's going to garner you those $200,000, $300,000, $400,000 years as an LO. Well, you go into a lender like I'm currently working for, or one like Quicken Loans. Well, they'll give you a base salary that is sort of cut up into cycles of each quarter, that is to say 4 quarters in the year, and you're paid according to a salary range based on the amount of units you convert, or a strict amount of dollars that you bring into the company over a given period. So let's say, for example, I bring in 50 loans. Let's say I originate and fund 50 loans one quarter. Well, then my salary will be set for the next quarter at a certain level. Let's say it'll be set at like $100,000. And you'll receive $100,000 divided by 12 for the next 3 months. Now, it's not quite as glamorous as bringing in, $26,000 for bringing $3.5 million in new loans to a company, but that is a really steady, really, sort of affluent paycheck for anybody. And $8,333, which is the, $100,000 a year mark when you measure it by month, is a totally reasonable amount of money to expect to make if you really put in the work, if you really perform at some of these larger online lenders who more often than not just work off of inbound leads that they purchase, right? So if this is something that you think that you could do, if you could pull in, 12 to 13 hour days for a few weeks or a month or 2 months or an entire quarter and get, a certain amount of loan balance, a certain amount of units in, this is something that is totally achievable for you, but it's not going to come easy. I mean, you're going to need to put in the work. Another way that you might want to go about it, if you're looking at it from the long-term point of view, is that you want to build that book of references, you want to build that book of business, and cultivate a lot of money over a longer period of time. And that's going to be a little bit difficult for you at the beginning stages of your career, right? Because nobody knows you, you don't have realtor partners, you don't have clients yet to give you references, so it's going to be difficult. So I'll give you an example. You can come in, work for a broker, decide on what you're going to be compensated, and that can never change. Whatever you list as your origination fee on the initial LE, once you sign off it, you can't really change that. That's part of the regulation around LO comp. This is something that you can expect to grow over time, and it's not necessarily a linear journey. Let's say for the first 7 months of your career, if you're working off of total commission or a lot of commission with a small base salary with a draw on it, you can expect to make $2,000 to $3,000 a month if you're lucky for like 6 or 7 months, and that can be hard. But then maybe on that 8th or 9th month, that's the one where you get 2 or 3 or 4, let's say, references for purchases that are $600,000, $700,000, $800,000 each. Then all of a sudden you're having that 8th month or that 9th month, or you're into your 2nd year even sometimes, and all of a sudden you wake up and you've made $40,000 in a month. This is something that can happen, but mind you, you're gonna have to keep focused. And you're going to have to look at the long game when you are working as this type of community-based loan officer, that one that works with realtor partners, one that engages with your clients not only during the funding period, but after, sending out networking, go ahead and shooting up follow-ups, see how you doing, how are rates, checking in with all of your borrowers, both present and past, as well as all your realtor partners and anybody else that can get you business. I mean, this is the original sales person, the sales model, the go-getter, the person that is knocking down doors and beating the pavement with their shoes. When you get into this industry, you're gonna have the loan officer that is more transactional, that works for a larger company, that takes perhaps inbound leads or the easy pickings for leads in the area with people who are familiar with your brand. And maybe you won't make as much, but you can make quite a bit, enough to be really, really comfortable. Or you can be on the other side, the entrepreneurial type of LO, the person that wants to create and maintain business, somebody who doesn't mind making less if it means you can make a lot more later on. So there's these two ways you can go about it. And basically, it's just up to how well you are able to sell the product, no matter what it is, and how well you are able to articulate whatever the product's unique sales point is. So guys and gals, the main thing to take away, whether or not you want to be a long-term commission-based builder, or if you want to jump right in and be more transactional, field a lot of these inbound leads, it doesn't matter. The main thing that you're going to need to know how to do is take whatever the unique selling point of your personal product at your brand, at your company, and know how to sell it, know how to connect with people over that deal so that you can get paid what you're looking to get paid in the long term. And eventually, create a career that's fulfilling for you financially, because a lot of people like to give a lot of reasons why, they're in this industry to help people, and certainly that's a motivator. But for me, it's all about making that money, and the best way to make that money is to make your customers happy. That being said, guys, I hope this information was useful for you, and if it was, go ahead and leave me that like, as well as hitting that subscribe button, and don't forget to hit the notification bell so I can notify you of just absolute unit of content that I'm bringing towards you every couple of days. I love to bring it to you, and I'd love to see you in the next video. Until then, peace.